Alright, so today I wanted to make a video on Taiwan Semiconductor, TSM. First things first, if you get value, please like, subscribe, comment. I really appreciate that. So getting right into it, I'm sure most people know what Taiwan Semiconductor is. Obviously, right in the name, it is a semiconductor company. They are fairly large, and they are not based out of the US, so if you buy it, it is going to be an ADR that you're actually buying it. They are a very good company. They've historically performed very well. This is one of the larger positions I have personally, so and I really do still like it. So let's get right into it here. They're very, very profitable. Gross margin 54%, 43% operating margin, 39% net margin, 31% free cash flow. Those are all very, very, very good numbers. Return on invested capital, return on equity are both very good. They've beat the S&P over the last 5 years relatively easily, it looks like too. Revenue is growing well, profits are growing well, net income's growing very well. They have a strong balance sheet. I mean, 2.5 current ratio, that's good. They have not issued a share. Their share count is basically almost exactly flat over the last 5 years and 10 years, so that's nothing overly concerning there. The dividend I'll get into in a little bit. Earnings and revenue are both supposed to go up quite a bit in the next year, so that's positive as well. They are a little bit above their historical PE. They're well below their historical price to free cash flow, though. They do have a price to sales of 10.76. I'll get into the valuation in a little bit here. Let's get into the financials. So if we look at, let's start with the revenue here. And if we go based on a quarterly metrics here, they're at an all-time high. They're growing fairly consistently. So that's very good news. And these numbers are ending the third quarter 2024, so they are fairly recent. If we look at net income / earnings, also at an all-time high, also trending up. Like I said, shares flat, so nothing overly concerning there. If we look at EBITDA all-time high as well, looks almost exactly the same as the revenue chart there. Getting into the metrics, this is where you'll see the cyclicality of the company and the semiconductor industry as a whole. If you look at their operating margin, the operating margin peaked out back in looks like actually 2022. It is down a little bit since then. It looks like it's starting to trend up a little bit again. Net margin, similar story there, although again it is above its historical averages. Free cash flow margin, similar story. If you look at based on free cash flow, they are really, really cyclical. The best they've ever been actually looks like, well, it was actually pre-2008, but if you look at this, it is clearly very cyclical, right? Back in 2020, they came down a lot. 2022, after 2008, they came down. So they definitely are cyclical. If you look at their free cash flow per share, it looks like they're in probably the mid stages of that bull run. And that's something that the semiconductor industry has seen a pullback recently, but TSM is basically right at an all-time high. So they look to be as strong as ever. Same thing for revenue here. Revenue has grown consistently over time. They're at an all-time high. So let's check on the dividend here. This is one of the reasons I like this company. They've consistently grown that dividend. 10 years, they've grown it 19% per year. The last 3 years, 17%. The payout ratio is right around 50%, so I don't think they're going to maintain being able to grow it 17% per year, but I do think that they can still grow it in the double digits. If you go back 10 years, I mean, this company's up 990%, the S&P's up 245%, so they've destroyed the S&P. If we go back, let's go back 5 years here, just out of curiosity. They're still up 270 versus 94. If we go back about 3 years, they're up 82 versus 32. So like I mentioned, they are, like, the semiconductor industry is very cyclical, more cyclical than the stock market in general. And TSM definitely falls into that category. but they're beating the S&P over every single measurable metric. Going back, it doesn't matter how far back you want to go. Even over the last year, I'm interested to see how is it done over the last year. So this is starting. That's a little too recent here. Even if, let's go back, like this is starting January 2024. They're up 89% versus 25. So going back 3 years, basically all of the gains have been in the last year. So like I mentioned, that is a little concerning that you'll have 2-year periods where there's no gains. That happens in the S&P as well. So that's not anything that's necessarily out of the ordinary. That it's going to happen with stocks sometimes. Something that I also found very interesting here, if you'd have bought this company 10 years ago, you would have a yield on cost that is in the double digits. You're talking over 12%. If you would have bought it 5 years ago, your yield on cost would be right around 5.5-ish%. So that is a testament to a company that can grow its dividend that consistently, that you're going to have these crazy gains, and on top of that, you're going to have a 5% dividend if you'd have bought it 5 years ago. So this is one of the other reasons why I really like it. Analysts have it basically at fair value. The average analyst has it at 212. They're currently at $208, $209 a share. So let's get into where I think it's valued. So if we go back about 10 years, they've grown earnings 14% per year. They've grown revenue just under 13%. The average PE is a little over 19. They're currently at 27.5. If we go back 5 years, I think they've actually grown faster. They've grown about 21%. The average PE about 22. They've grown revenue 21. So they're growing faster over the last 5 years than the last 10 years. So let's try and figure out what this company's worth. I'm going to assume that they grow earnings 15% per year, which is less than what they've grown over the last 5 years. And it's also less than they're projected to grow over the next 5 or 10 years. They're not going to dilute. They're not going to issue a share. They're not going to buy back shares. They're going to grow the dividend 12% per year, and they're going to trade for a 20 PE, which for a company that's growing faster than the S&P, I think if anything, that's probably a little bit conservative. That assumes they're going to grow about 10% per year, and they're exactly at fair value where they're at right now. So in other words, they're fair value, at least based on what I'm going. Obviously, I could be wrong about all this stuff. Do your own research. So if I didn't have a position, I'd probably wait for a 10% pullback. So we're talking anything below 190, I think, is a buy. If it goes below like 170, 180, that's where I think you're starting to get some real deep value. Let's assume that they grow. Let's assume that they trade for, let's just say, like a 22 PE, which is the same as what they've been at, the same as their 5-year average. That assumes that they're actually about 9% undervalued. That fair value is $227 a share, roughly. So I don't think that this company is necessarily clear. I think if I didn't have a position, I don't think I would be buying right now, mainly due to the fact that I think that the overall market is expensive. So either way, I'm waiting for a pullback, but that doesn't mean it can't go higher, because it clearly, at least in my opinion, is not clearly overvalued. I think you could make a case that it's a little bit overvalued, especially given the price of sales is over 10, but I don't think that it's way overvalued, especially for a company that's projected to grow faster than the overall market, and on top of that is that consistent. Like, they've been very, very consistent over the last decade. Now, again, there could be a black swan. You know, China could invade Taiwan and take over things, but I know they do have a large plant in Phoenix, I believe. So that wouldn't necessarily derail the whole company, but every company does have a potential most companies have a potential black swan. So I really do like this company. If it went, below 190, for sure 180, I probably would start to pick some up. But I do have very close to a full position, so I'm not necessarily super eager to do that, but that's because I already have a full position, and my average price I think is like 120, 130 a share. So I'm up, whatever that is, 60, 70% on that position, maybe 50%, whatever the number is. So that's why I'm not necessarily super eager. But if I didn't have a position, I would be jumping in. So anyway, that's what I wanted to bring up today. If you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.